focus. Ideate, innovate, enable. DBS presents CNBC-TV18 India-Singapore Connect.
Hello and welcome to India and Singapore Connect, a CNBC-TV18 special in association with DBS. There is potential for this partnership to grow and what it means economically and commercially. To discuss that and the implications and the impact going forward, joining me now is Piyush Gupta of DBS. Piyush, many thanks for joining us. Appreciate your time here in India. It's good to have you here with us in India. But let me start by talking to you about this 30-year journey that DBS has had in India. Many milestones to your credit. How has the bank really changed its position in India, especially post the subsidiarization?
Well, we started 30 years ago as a representative office. And so, truth be told, the first 15 years, we were kind of marginal in our presence. We started branching out, I think, in 2007. And with all the usual constraints of international bank in the country, distribution in particular. But the last 8-10 years have been actually very good. We've got a lot of traction. So as you pointed out, we subsidiarized in the country. We're one of only 2 foreign banks that did that. And that removed the shackles of distribution. We could start branching. Around the same time, we launched our first digital banking product anywhere in the world in India, leveraging the India stack. So it was a mobile-only retail banking proposition. That started doing quite well. And that obviously has changed the complexion of our business manifold. We're now 500 plus branches. We're in 350 cities. And so we have a scale today that we certainly did not even 10 years ago. Now, like many other international players, we paid tuition fees along the way. But I have to say today, India is our fastest growing business. And the complexion of our business is changing from being a niche, large corporate bank to now doing pretty much everything. We're doing MSME banking, we're doing retail banking, we're doing wealth banking. It's a broad footprint. And obviously, the Singapore-India agenda, not only the history, but the progress that bilateral relationship has made in the last decade, that's really been very helpful for us as we've been able to grow our business over here. So very constructive on where we are and very constructive on the future.
You talked about the digital experiment, and I think what is clear now, not just for banks, but across different sectors, is that you need to be omni-channel. You need to have a phygital presence at this point in time. What's been the big lesson and the learning from your digital experience? And how do you see this going forward? As you said, your 350 locations, 530 branches at this point in time. As you go after the mass affluent segment, what will that mean as far as strategy is concerned?
Well, I think you nailed it well. Our biggest learning was like every other startup. When we launched our DigiBank here in 2016, we got well over 3 million customers in 18 months. And so customer acquisition was great. The problem was 18 months on, if you got 95% of those customers, you would never be able to monetize. We took DigiBank from India to Indonesia, and our strategy there was a little different. We're a little bit more targeted. But more important, we started doing the phygital thing, leveraging a little bit of a branch network. And we saw that this omni-channel that you referred to actually changes the game quite considerably, which is why we subsidiarized and which is why we were looking for a platform so that we can complement the physical with the digital. The digital still matters. I think if you don't have cutting-edge capability around convenience, around use of data, you lose. But just that, without a brand, without trust, without the brick and mortar, is not that effective either. So you do have to blend the two. And I think we've been able to do that quite nicely now. Now, you talked about wealth and affluent.
Yeah.
The truth is that the bulk of wealth in India is still fairly concentrated. It's the top 10 cities. And if you want to stretch it, maybe 20 cities. But within those cities, the same analogy applies. You need to, today, make sure you have a good digital offering. Well, even wealthy people want to have stuff on their phone. They want to be able to check, they want to be able to pay, they want to be able to look at their investments. But they also want to have the convenience of a banker who runs up and down and a nice brand that they can get comfortable with. So our intent is to double down on some of these big cities for the wealth population and make sure that we can do a little bit more of what I think of as saturation marketing. in some of those cities.
Since we're talking about digital, I want to talk to you about how you believe that banking is going to be reimagined as we move more and more into ML and AI, and what that means specifically as far as DBS is concerned. I know you brought in a new CIO in May this year, and you do believe that you've been able to do a lot more on the digital side, but there's still a long tail that you need to address. So where are you doubling down in terms of capabilities, in terms of investments, as far as the digital story is concerned? And when we talk about reimagination, what would that mean?
Well, let me break it into three capabilities that I think are going to be critical as you think about the future of banking. The first is well underway, which is you have to digitize everything, which really means the customer experience. The customer is used to a Google-like experience, which is instant, which is efficient, and which is embedded in your life. People used to go to a bank. Now, people don't want to go to the bank. They want the bank to be part of what they do. You don't want to take a mortgage. You want to buy a house. The mortgage journey should be embedded in the house buying process, as an example. And so that's phase one. You just got to make the best journeys, the cleanest journeys, and embed them as much as you can. I think we still have a head start. We started in 2014 with our strategy of doing this embedded stuff. We have a team of 150 designers, anthropologists, ethnographers, who are acutely focused on understanding customers.
Anthropologists and ethnographers.
Think about it. When I started banking, we hired accountants. Now we hire design people, ethnographers, and anthropologists. The world has changed. But we do that because finally, it is the customer experience that matters. So that's what I call table stakes. A lot of companies caught up in COVID because everybody had to convert to digital. Like I said, I think we're still ahead because we really think about customer journey and design at a level that most banks don't. The layer on top of that is data and AI/ML.
Right.
And that is today's story. It is happening, but it's not easy to do. It's much harder than the digital experience because first you've got to master data. You cannot do AI/ML unless you've got data. And data for most legacy companies like us is a huge, huge challenge. If you're Facebook or Google, Amazon, you're born digital. So all your data is digital. But if you're a bank and you have 50, 60 years of physical data, analog data is lying in systems, is lying in warehouses, how do you clean it up? How do you collate it? How do you reference it? In our case, it took us 6 years to haul the data over into our data lakes. So that's a big moat. It's not an easy thing to conquer. And then after that, you got to build, obviously, the AI/ML models. Today, we have a team of about 1,000 data scientists and data engineers. We have about 800 models, which are powering almost 350, 400 use cases. But the biggest challenge is how do you then socialize it within the company, institutionalize it? So today, for us, the use of AI/ML is deeply embedded in very strange functions. In human resources, for example, our hiring is driven by artificial intelligence. Our internal mobility is driven by artificial intelligence. In our marketing, all our marketing nudges, we do 30 million nudges a month to prod people into buying new stuff. Our risk management and our early warning detection is all driven by artificial intelligence. So that's today's story. Part B of today's story is Gen AI. So AI leverages data to do prediction. Gen AI leverages unstructured data, which you can read, synthesize, and produce output.
Right.
And Gen AI is a 12-month-old story. So we're now working on that, changing the way our contact centers work, changing the way our software development happens, changing the way our use case testing happens, and providing every one of our employees, by end of this month, every one of our employees in DBS, 40,000, will effectively have a co-pilot, which creates productivity in everything that they do. If you look at the nature of money and value, the nature of value has always changed with technology. It used to be cowrie shells, then it became metal, then became gold, then became paper, then plastic. So it stands to reason that it's more and more as you digitize, it's going to be bits and bytes. Already in India, 46% of global payments, digital QR code, etc. in India. So you can see the pace of change.
Well, time for us to head into a break here on the India-Singapore Connect, but we're back with more conversation with Piyush Gupta right after this.
DBS presents CNBC-TV18 India-Singapore Connect.
Welcome Welcome back. You're watching the CNBC-TV18 special in association with DBS, where we're talking about the potential opportunities for growth between India and Singapore. You know, you talked about the gains on account of technology and the billion-dollar target that you've set yourself on course for. But I also want to address this from a larger issue of cybersecurity, as well as, the digital threat that we are now dealing with specifically for the financial services sector. I mean, what does it take at the back end to be able to get to that outcome?
There are two things which are really important. One, you have to make sure that your perimeter defenses, your peripheral defenses are well protected. We have what we call an onion layer strategy. So we have 7 layers, and each layer we use different technology, different equipment from different providers to make sure that somebody needs to get through 7 layers if they need to break into our systems. So you have to invest in that. It's not straightforward, and you've got to be thoughtful about how you invest in that. But the second thing, which is more powerful, you have to believe even after all that,
somebody may get it.
Somebody will get it.
Yeah.
You know, somebody will leave a window open or a door open, and somebody will get in. So then you need to do a couple of things which we really focused very hard on. One, you got to create micro-segmentation in your internal systems. So if somebody does get in, how do you make sure they get logged into a room? They can't go over the whole house. And we spend a lot of effort thinking of the right micro-segmentation strategy, so you minimize the impact if somebody gets in. The other thing you invest a lot in is back to AI, is you look for unusual behavior. So you need to be able to detect very quickly that something's wrong, somebody's got in. And so we have a large number of AI models constantly running to see this behavior looks anomalous, so it could be something wrong. And so you'll be able to triangulate it and then freeze it out as quickly as you can. Now, all of this requires training, it requires investment, it requires budgets. But in today's world, you don't have a choice because data privacy, data leaks, data loss is the biggest risk that we face right now.
Let's talk about India and Singapore. And as I said, natural allies, and there has been momentum building along this partnership. How do you see it from here on? And what do you believe will be the points of partnership where more can be done at this point in time?
So, Shane, for me, this India-Singapore Connect, the corridor we're talking about, there are really 2 important things that we want to try and achieve. One is to celebrate what we already have. And the truth is that in the last few years, a lot of people have lost focus on understanding how important this relationship is and how much attraction it has gained over the last 5-7 years. Singapore's investments in India are well north of $100 billion, probably close to $150 billion. That's massive. It's much larger than any single country in the world, the stock of investment, but also the flow of FDI. You look at the last 5-6 years. Every year, Singapore is the largest FDI into India. And some people tend to believe that this is, round tripping of somebody else's money like Mauritius. It's actually Singapore money. It's GIC, it's Temasek, it's DBS, Sembcorp, Singapore Airlines, Singapore Telecom. These are Singapore's champions who are heavily invested in sector after sector. We're in the port, we're in infrastructure, we're in energy, we're in telcos, we're in finance. So it's an unappreciated story, right? We need to make sure we celebrate that a lot more. The reverse is also true. When I talked about we created DigiBank in India and then took it out all over the world, that reflects a couple of really important things. India's ability, the talent base and the tech capabilities are really exceptional. And so that you can actually take that and engineer and drive a lot of stuff as you go out into the East. We've been able to do that in our own case. And therefore, we need to recognize and appreciate that story. That's the first part. Now, to your specific question, the way forward, I'm just so bullish on the opportunity we have for 2 or 3 reasons. Number one, everybody knows India is the story of the moment and will be the story for the next several years, decades maybe. And a lot of Singapore's capabilities and strengths are well aligned to be able to participate in that India growth story. You asked which sectors, we talked about AI, machine learning and technology. Now, India has some strengths, so does Singapore. Energy, it's a big deal for India, 500 gigawatts of renewable energy by 2030. Singapore is a champion today in renewable and green finance. So there's an opportunity for us to co-construct, co-create, including moving down up the value chain, things like hydrogen and so on. If you look at infrastructure, continues to be a big need in India. Singapore, everybody knows infrastructure. Singapore is great, but it's not just because it's small cities. Singapore has capabilities. Public housing, for example. I think there's a huge opportunity over there. water, going to be a big crisis in South Asia and India. Singapore has mastered water. So there are fields and infrastructure that Singapore can clearly participate in. And a source of capital. It's a small country, but we have over $1 trillion in reserves, and we are consciously reallocating capital across the spectrum. So that's a big opportunity. The reverse is true. India has always had a look-east policy, now act-east policy. But for the first time, I can see that India is actually focused on both sides of the supply chain and looking at Asia ex Japan ex China quite seriously. One is on the sourcing side. As you think about Viksit Bharat, the best way you get Viksit Bharat is to plug into Asia supply chains. And that is something that is already beginning to happen. The geopolitics helps. And because of geopolitics, all our clients, for example, the Koreans, the Taiwanese, everybody from Asia, the Western multinationals, are all looking at creating an additional air capacity in India. So that's a huge opportunity for India to be able to attract a lot of this supply chain work. But equally at the tail end of the chain, for the first time, Indians are beginning to think about global brands. And many of these global brands will play extremely well in Southeast Asia. People don't realize, but you think about Indonesia. Do you know what the word for a three-wheeler auto rickshaw is in Indonesia?
Tuk-tuk.
Bajai.
Do
you know why Bajaj? It's Bajaj.
Yes.
So Indian Godrej, it's got a lot of brands in Malaysia and South. So Indian brands, actually, the price point and the brand positioning is quite good. So there's an opportunity for India on both sides, the sourcing procurement side, but also the distribution and sales side. So I do think because of the alignment of interest, the nature of geopolitics, the massive growth, Singapore doesn't have a natural hinterland. And therefore, the ability to build this connection is actually very, very interesting for both countries.
Let me ask you about the startup ecosystem as well, and what you believe could perhaps be the potential opportunity there and the headroom for growth. We've seen this sort of flurry of unicorns being minted here in India, and of course there has been a correction as far as valuations are concerned. But how is DBS, for instance, looking at nurturing the startup ecosystem in India with the hope of taking some of these companies global as well?
Well, the startup ecosystem is structurally quite important for us as a bank. And we do that. We have something called a digital economy group within our banking system. We started working with many of the startups very early. I was in Bangalore yesterday, and we had a session with many of the startups and some of the VCs. And I was actually quite chuffed when I asked them which bank in India stood out for working well with startups. They said it's DBS. So obviously we have some capabilities, partly because we're digital ourselves. And so we understand the pain points and we know areas that we can plug in. But we complemented that. A couple of years ago, we set up a fund along with Temasek called Evolution X. It's a $500 million fund to actually do seed mezzanine financing for many of these startups. And the third thing, few people realize that Singapore itself has 300 startups in India, Singaporean startups. But the reverse is also true. Many Indian startups actually have a funding structure and a headquarter which is actually based in Singapore. So we actually can participate on both sides, right? It's helpful. So I think our capabilities, our digital capabilities, our ability to get people, startups, and to scale them to global markets, to participate at different levels of the financial stack, these are actually quite pertinent and relevant to startups. And I think, therefore, we can be quite material to them as they scale, grow, including, as you said, take them to public markets eventually.
Well, speaking of material change, you talked about that in your previous response about sustainable financing, green financing, and I know that that is a priority area for you, and it is a priority for us here in India as well. What role do you see yourself playing in that as we look ahead?
The first and obvious role that banks play is allocating capital, providing capital. And there you can break it very simply into what you do more of and what you do less of. By and large, we focus more on which are the areas we can do more in. Though there are some areas we have tried to do less in either. They're just very heavily carbon intensive. We've tried to put in a pathway so we reduce our financing in some sectors. But the bulk of our focus has been how do you actually catalyze incremental financing going into sectors that are low carbon intensive? And how do you help companies transition from what I think of as a gray business model to a green business model? So we provide capital and then we provide solutions, sector by sector. Today, our sustainable financing book is well over 70 billion Singapore dollars, so call it 50 billion US, in the last 3-4 years. So we participate in a whole different range of green solutions with clients. And so allocation of capital is an obvious one. The second is advisory, though. So for many sectors, the solutions are not obvious. And as we work with our clients across the world, we can figure what solutions might work for them. So we help sectors to build their own transition pathways. How do you actually reduce, and what technologies would work and could work for you? So it's the second space that we actively work in. A third area that we're involved in is trying to create carbon markets. I'm convinced that to actually get net zero is not easy for most companies. And also there is this big debate about, the North should fund the South.
Yes.
It's not going to happen G2G. No country can put it into their budgets and into their fiscal numbers. So the only way the North will really fund the South is through carbon markets and private sector flows. So we've launched something called Climate Impact X, joint venture we're in, which is a carbon marketplace in Singapore, and is beginning to do quite well. We have a carbon auction platform, an exchange platform. The idea of being able to extend and create carbon markets in India and then extend and link them to the international market is something that we're flirting around with as well. So market infrastructure, allocation of capital, advisory, a whole range of different things that we can do on the corporate side. But interestingly, we also do this on the consumer side. So I think banks have a role to play in shaping consumer psychology and creating a set of green products. We do that with our credit cards, our mortgage financing, our renewable home financing. We do that by creating opportunities for people to donate and to buy carbon credits. For the carbon footprint, we create carbon calculators. So we do a lot of stuff in the retail space at the same time.
Piyush, it's been an absolute pleasure. Thank you very much for joining us here on this special CNBC-TV18 conversation. Well, with that, it is time for us to wrap up this CNBC-TV18 special from all of us here on the team. For now, goodbye and many thanks for watching.
DBS presents CNBC-TV18 India-Singapore Connect. Focus, ideate, innovate, enable.